Sense is run by a bunch of investment bankers, and their modus operandi.
Hello, I'm Fernando Luque, editor for Morningstar, and I'm joined today by Nicky Stafford. Nicky is the manager of the Fidelity Global Consumer Industries. Thank you for being here, Nicky.
Thank you for having me.
Nicky, intuitively one could argue that, well, it's not the best moment to invest in the consumer sector, considering the low growth environment and the poor consumer confidence. What would you respond to this intuitive thinking?
I think there's a few points. The first is, certainly I agree with you that right now there's a huge amount of uncertainty out there in the markets, and the world does have a bit of a growth problem. But I think consumer investments are still extremely attractive, and that lies in the fact that I believe there's a misperception when you think of consumer stocks. Typically people think of discretionary stocks and very cyclical ones. However, over half of the consumer index is very defensive areas such as staples, such as food manufacturers, tobacco companies, which I think are steady compounders throughout all market cycles and do deliver superior returns over the long term. So, if you look across the consumer space, there's still several attractive investment opportunities out there. And particularly if you look at consumer stock performance or my fund performance versus a diversified index in both bull and bear markets, over the last decade, you've seen consistent outperformance in all years bar two. So I do think right now is a very attractive time to own consumer stocks.
Yeah, well, you're managing a sector fund which is really global and really diversified. But how do you position your fund regarding these two vectors, the globality and the diversity? I mean, which subsegment do you consider more attractive right now? Staples versus discretionary?
It's a very good question. Clearly, we are in uncertain times, as I said before, and today the fund is slightly geared towards staples. However, I would highlight the fact that there's several areas of discretionary that are very attractive to me, whether it be because of valuations from the market sell-off or the structural growth that I see in the world today. Therefore, with a broad brush, I wouldn't say the fund particularly favors one sector meaningfully more than the other, but rather when I build the portfolio, I focus on where I believe the structural growth is and where I believe you have high visibility on the structural growth and put the investments behind there when the valuation becomes attractive.
Mm-hmm. How do you position yourself in the current debate between those who favor investing in emerging economies through developed companies versus those who prefer to invest in emerging countries directly through emerging companies?
It's a very
in the consumer sector.
Yeah, it's a very good question, and we talked through it in the presentation. There's a slide in here that shows the returns of consumer stocks by region each year. The interesting takeaway is when you look over the last decade, there are several periods of a couple years where you can have meaningful outperformance of the developed world consumer stocks, even though they're being driven by emerging markets, while the local emerging market stocks actually underperform. So I think with the global mandate, you actually have to be flexible. I don't think there's a rule of thumb. If you believe in a theme, if you believe in structural growth of China autos, you should buy the domestic China auto companies. Rather, I think you should think about the business models, who benefits the most, where the incremental growth is coming through, and where the incremental profit flows through. And I think that really does force the investor to be not pigeonholed into focusing on just a country, but what the global opportunities are.
Yeah, and to finish, what are the base investment themes or ideas that you are incorporating into your fund?
Yeah, at the moment, they haven't changed materially since I've taken over the fund 3.5 years ago. But they continue to be focusing on where I see structural growth. And particularly in this uncertain environment, the need to focus on structural growth where you can build conviction, I think is of utmost importance today. So areas that I'm quite interested in are emerging markets, the development of an emerging market consumer, the wealth creation that we're seeing in several regions around the world. I think online is also an extremely interesting area which will benefit the consumer and we'll see very strong growth for the next 10, 20 years, so investing behind online. And then, there is a pocket of the portfolio which is what I call tactical, whereas the market is significantly punishing sectors where you are at cyclical lows. And if I can identify catalysts for how that industry and that company within an industry can move through the economic cycle, I will put investments behind there.
Mm-hmm. Okay, Nicky, well, thank you very much for your view on the consumer sector. Thank you very much.
Thanks for taking the time.
run by investment bankers, and Morningstar's tools can help make quick